right. Today we're going to talk about on-chain data and asset manager. I am with Nadia, the Chief Strategy Officer of Lagoon. Nadia, welcome. Thanks for being here with me today. You want to introduce yourself a little bit, and then I think you have something to talk about. Go on.
Absolutely. Let's rock and roll. So yeah, Nadia, background in law, TradFi, and DeFi. So nice, smooth transition. So I've seen both worlds. I've seen what works, what doesn't, and what's in between. So happy to share my insights on the topic under your kind guidance.
Awesome. I am Mathieu, the co-founder and CEO of Octave. And then yeah, on-chain and asset manager. And I'm saying asset manager, but Nadia, I'm going to send it to you right away because I think I should not say that. So
I have a very strong opinion on the matter, and I would advise the entire ecosystem to keep track of this one. So ultimately, asset managers are the funds and entities that manage other people's assets, right? It's a profession that existed almost since money existed. But in the world of DeFi, we are different. So we are not asset managers. We are either vault curators, DeFi strategists, or risk managers. The reason for that is, of course, that we are not traditional financial institutions. We are not regulated. We are doing things in a completely different way. We quite often do things in self-custodial way. We do not want to use TradFi terminology. We do not want to associate ourselves with that. So please, vault curators, risk managers, or DeFi strategists.
So the title is changed to on-chain data and vault curator. So let's start like this. All right. So as a vault curator or a strategist, you need to use data. In traditional finance, a lot of data is available. How do you use the on-chain data how does it work in your decision-making process? Where do you use data in your decision?
So we will use data at different points, right? So there's just not one answer.
For different reasons, depending where you are in the cycle and all that.
Exactly. So we use data for everything from net assets value calculation, so it's the assessment of the assets within the vault.
And I'm going to stop you right there, because net asset value, NAV, is something that every asset manager know what it is, but not a lot of actually vault curator or DeFi strategists know what is NAV. And the more we kind of work with, at least at Octave, we work with like family office and hedge fund, and then we talk with them and they're like, hey, can you show us your NAV? And you're like, your portfolio? So like in DeFi, people want to see the portfolio value, but there's a name. And then that's interesting because there's a lot of like wording that are totally different, like you said at the beginning.
So let's take a step back and even look at what is a vault and why do we do it. So ultimately, a vault is used to pull people's crypto portfolios together to do crypto portfolio allocation at scale. If you have a small crypto portfolio, so let's say you maybe hold 100K or 5K or 10K or $10, you cannot have the same efficiency on chain as when you pull portfolios together and allocate them efficiently under professional guidance and supervision by people or bots who've been having a very good track record in these activities. So this is why you pull the portfolios. Then when you pull it into a vault, what you want to do is the value of these crypto assets within the vault and positions, are they going up or are they going down? So ultimately, what is your performance?
Only up, hopefully, but yeah. Not today.
This is for the good vault curators. You only go up and you never lose money. But this is one of the main and critical points, both for the users and for the managers, to get the right data on the positions within the vaults, for them to assess it, quantify it, and show it to the users and the managers themselves. Because for the managers, it's super important to be able to take the fees. So very few managers are doing it from the goodness of their hearts. How it function is they take a fee on the vault. So it's a performance fee, it's a asset fee, whatever that might be. So to calculate it correctly for them and for the users, they need very accurate data on their position. That can be super difficult depending on your allocations.
100%. So NAV thing is the first thing. And I think in crypto DeFi, we've seen portfolio platform for quite some time. But then when we go deeper, where you want to have more information, historical data, and so where else? So we have the NAV, that's the first place. Where else do you need on-chain data as a vault curator?
So it will very much depend on the strategy of the risk manager or vault curator. They would want to see They would decide on the metrics that are important for them and want to put the most accurate data at any given time. So it very much depends on the strategy. It would depend on the chain or whatever else they would want to implement. So also when you decide the vault strategies.
Yeah, and like on-chain data is one kind of data you can get as a strategist, but correct me if I'm wrong, but if you can be a sentiment trader, you have Twitter, like DeFi is Twitter, we are always there, forecaster coming there, there's a lot of other platforms, but social platforms are important for trader because they need to understand what's the sentiment, what's the trend and all this. So the on-chain data is just one part of the strategy. There's a lot of other stuff. And then now we go from like showing the value, and then we go from like taking decision of where you want to invest in your strategy. And then after that is the part that everyone loves, reporting, right? So how do you do your reporting? Why on-chain data is important for reporting?
Reporting, the beast in the room. Reporting is particularly important for people when they want to file taxes. It's particularly important for institutional managers to enter this ecosystem.
What if I don't do tax because I'm in the Cayman?
Then you're out of scope.
You actually
I cannot help you.
Yeah, I'm gonna help you there. But like, it's often a question we get because like at Octave, a lot of people say, "Oh, but I don't need your data. I don't do my taxes." Or like, I'm in Cayman. But the problem is, if you're gonna have LP, you're gonna have users, so you're gonna have to still report and reconcile all your transaction to be able to show to your investor or your user what you've done in the past and what's your performance of the past. And therefore, you need some reporting. There's a lot of reporting platform from traditional market. I won't name but people know them. There's like few of them, but they're not that good in on-chain data reporting. They're still struggling a lot. And there's a lot of on-chain data platform, and it's still quite noisy, right?
I would, of course, never advertise neither tax avoidance nor evasion. Please, everyone pay the taxes. But at the same time, I also know and realize that for a lot of people, the tax reporting will fall on their shoulders unless they specifically ask us to provide that type of data. So what we see with institutional grade depositors is that, yes, they need and they want to put the reporting obligation on us. So not enough just doing the vault curation, but also providing the right type of data in the right format for them to enable them to do the tax reporting.
Because they're used to it. Because in traditional, if you have a brokerage account or anywhere, you trade, you put the ETF, whatever you do, at the end of the year, they send you a slip and that's it. You give that to your accountant and finger crossed. But in DeFi, you put in a vault, the vault won't give you your 1099 or whatever the hell you need to do your taxes. They're going to be like, deal with it. So I think there's a lot of education that need to be done where the DeFi part, every vault, I always say the same thing. The beauty of DeFi is it's decentralized. The nightmare of DeFi is it's decentralized because everyone can create anything at any point in time. And therefore, why will I care about giving you a 1099? That's not my job, right? We've seen some people try to do that a little bit, but it's like protocol based doesn't make sense, right?
But Mathieu, it's a huge barrier to entry. So if we want more institutional grade funds coming into the space and deploying the capital in the space in DeFi, we need to give them the tools to actually comply on their end, to do everything that is possible within our power. And this is the reason why we partner with you, for instance, because I know that my users, whether they are new vault curators or they are LP of institutional grade, they will be asking me for either partners or me to provide this service to make life easier for them. If I don't do that, of course, I specialize, so I need partners like yourself. If I don't provide these services, they will just not deploy. So it's as simple as that.
Yeah, it makes 100% sense. Like we work a lot with family office and hedge fund and all this, and they say we don't touch DeFi because there's no reporting, there's no fund manager and all of this, and then they go see traditional fund manager and they're not able to get the information. We have actually some investor that were invested in us to get the data, and then you work with a traditional Web 2 fund manager, and then the fund manager went to the fund and say, we cannot do our job because we don't have the data, and then therefore this company had to come to us and say, can you help our fund manager? So clearly, either fund manager need to start exploring the DeFi on-chain data, or on-chain data company need to start giving like a larger service tool, like giving reporting and stuff like that.
So now let's take That's exactly what you said, and look at what's been happening in the last couple of years. So in the last couple of years, we actually got quite a bit more clarity in different jurisdictions on how to tax crypto. And thank God for that, for the better, for the worse, it depends on the country. But before that, we didn't even have this clarity, and still certain jurisdictions, they are not crystal clear. So you have regulatory issues, you have data issues, you have traditional, let's say, NAV and fund accountants who do not understand DeFi space, who do not understand blockchain data, do not have the skills. Yeah, who do not have the skills. So you need to, it's education, access, and industry standards. Yep. So let me ask you, Mathieu, are you going and creating these industry standards?
Yeah, it's a question that we often get, like, because we talk, like I said, to hedge fund and family office, and they say the tool is not there, just build that, or why can't we just take standard or regulation and bring that to Web3? And then you just said the answer is in your question, because you said we don't have guidance from different country, and each country is different. So what if I have a fund set up in the Cayman or Portugal, or wherever it is, and I have user from around the world? How do I give them the information for their tax and for their reporting? I don't have to do that. It's complicated. And even in traditional market, that's how I work. It's not only like a pass-through fund where the fund is not responsible for reporting for their LP or their user, but their LP user are sophisticated player. Where now in DeFi, you can have someone in a vault with $100. They are not aware of all the burden of the tax and all this, and that's going to be a problem moving forward. I think one of the big problem we have also is that all the on-chain data that we've been having since the beginning is really just to get a number on the screen. Like all the APY and APR are hard to believe, let's say that. And then there's not a lot of like sophisticated players that are really aware of how the Web 2 works and try to find a solution. I'm not saying bring Web 2 solution to Web 3 because it won't work. You cannot regulate Web 3 the same way you regulate traditional finance.
And you shouldn't, otherwise you eliminate all of the advantages and the value add.
Exactly. So that's why there's a lot of work to be done to create new regulation or new standard to work on this. On the data side, there's some company trying to do like standard of data, but it's hard because you don't want to block the innovation and the creativity of everyone. You want to make sure that anyone can create anything at any point in time, but you can understand what they're building. So there's a lot of work around that.
There's a lot of work, and I think it will be best performed as some sort of soft industry standard where the type of companies get together and actually agree on high-level standards at least, because that will make life easier for everyone. So another paradox that I would like to highlight at this panel is, of course, the consistency of the different data points and metrics. So you just, as a user in DeFi now, it's very difficult to see how some of these RPRs or performance metrics are calculated and to compare across platforms. You simply cannot.
I mean, you open different, like 3-4 different portfolio, you'll have different value because this one doesn't track this chain, this one doesn't track this chain. And I think one of the big thing that we've seen at Octave is that a lot of people, like I said, are coming from the Web 2. And there's different layer, like there's the raw data, then there's like the enriched data, the explorer level, there's the sub-ledger level, the tax platform, and all of these people are all trying to build the entire stack by themselves instead of trying to work together. So that's why there's a lot of consensus, like a lot of people working together to have a consensus on this. But I think it's a big problem that we should try to address and work on because, as you said, and as we've seen, hedge fund, family office, and like the institution that we wanted to come in the market are not coming. After all the meme coin stuff, and sorry for every meme trader, but like if we want an institution to come here, it's not with meme that they're going to come. We need to have like really solid tool to get the information that they're used to get in Web 2 in a different way because we cannot bring the Web 2 tool in Web 3. That's why Bloomberg is not in Web 3 and all of these like really famous TradFi platform are not in Web 3. They don't know how to do it.
You're spot on. It's a barrier to entry. We need to make it easy for them. They are interested, they're curious, they want to see DeFi, or they want to use DeFi for the yield that it has potential to offer, but all of the risks and all of the hassles, like it's difficult for them to overcome.
How long do you think it's going to take to the industry to kind of get standard? And recently, I think like 2-3 days ago, we've seen the CEO of Citadel, they're wanting to start some market making in DeFi, and they think it's going to be bigger than Bitcoin and all of this. And do you think that they're coming now? Is it going to happen? Are they going to be the one and help us build that tooling, or we need to build that tooling for them?
I think they've been coming for quite a few years, and every year I'm in crypto, they are coming, but they're not quite there yet. So this year, I do hear rumors about new players entering the market with different products, different offerings. Well, we see JP Morgan having their tokenized fund, both settlement and settlement and transactions of instruments on chain. We see stablecoins proliferation. We see so much. So yes, but at the same time, I don't want
so
them
much,
to
but so little in the tooling. Like there's a lot of like interest, a lot of people that say they want to come and say they want to like use the value of DeFi. Because don't get me wrong, when I speak with hedge fund family office, they often see the yield and they often see that they can generate good yield in DeFi. They just don't come because they're like, we don't have the tooling to do our job after making the yield, right? That's also one big problem.
Have you ever worked with very big institutions? They're very slow-moving beasts. It's difficult
slow.
for a small startup to service a big behemoth.
And for a reason. I mean, they have a lot of reputation to care, right? We spoke with Vanek, we spoke with Fidelity, we spoke with a bunch of big one, and it all told us, oh no, I'm not doing it, but I have FDUS, which is Fidelity, but just for crypto, that are doing it, and therefore, if something bad happened, the shit hit the fan, that's not going to be Fidelity. It's going to be the other people, right? Because they have a reputation of years and years of trading and being efficient and all of this that they cannot go in this. I think the biggest one or the most active or open to the idea is Vanek. We've seen them put a Punji Penguin in as a PFP and stuff like that. So like, we can see that are coming, but I think that they need a lot more like stability in the data and all this. One thing I'm also say is that it takes time. Like I've been in crypto for about 12 to 13 years right now. My dad is an accountant and still do zero crypto. I think it's also a question of generation. The people right now that are starting to take control or be executive at the BlackRock and Fidelity and all this, or people that are 35, 40, they are in crypto for the last 4 or 5 years. So therefore, they'll be like, okay, let's move there. I know how to do it. Because if you ask your 65 years old grandpa jump into crypto, I understand it's a bit more complex for him to jump in and be like, yeah, I trust that. So there's also like a generation and it happened. And I think that after like, 14, 15 years,
but also the older generation in TradFi, they're not even interested in the new shiny thing. They already made it. They're nice and cushy. They will not be putting their head on the block for the new shiny product. They're just waiting for retirement. And it's fine. I understand. So take the ones who are ripe for...
It's opportunity. It's opportunity for anyone that want to get in, like Lagoon, where like you're not part of Fidelity or anything, but you're creating a vote for family office and hedge fund, and that's where it makes sense because now younger people, even young people from a family office, are now taking the control of family office, and that's where it's getting interesting because a lot of people are jumping in.
But let me give you another example of actually a mid-size Swiss family office that we've been talking for a long time, and they're very bullish in crypto. They've been allocating for a long time, but whom they've been allocating to are the VCs mainly. Why? Because this is still much easier for them to understand.
Reduce the risk also. I didn't lose the money. I put it in a VC that was supposed to be an expert, and he failed. Exactly. It's not my fault.
Exactly. That is true. So for them, allocating to on-chain vault curators is still a more difficult step to take rather than allocating into a token investor VC. So
makes sense. So there's a lot of stuff that we can talk about on-chain data and vault curator or DeFi strategists. We have a booth, Octave, here all week. We're here until Sunday. Nadia is also here until Sunday. If you have any question, if you want to talk about taxes, vault creation,
no tax.
anything,
vault creation.
Happy to discuss about this. Data, on-chain data is what we do, so we're happy to help. Thank you a lot, Nadia, to be here.
And the last final note is that, well, vault curators are taking the DeFi market by storm. The DeFi is actually getting complex and complicated, and vault curators make it easier.
And perfect, because you can use our data.
Exactly.
Awesome. Thanks a lot.